Hello and welcome back to another video on how to secure yourself financially. So now, because in the couple past videos and also past weeks, I dedicate time to learn about this section made by the Security Exchange Commission, this beginner guide to financial statement. So when I'm doing this, okay, that the whole point of this is to this is just a section of a bigger picture of how to secure yourself financially, especially from the Morning Star Investing Classroom, okay, like this, where in there they have several sections like feature content, stocks, funds, portfolio, bonds, ETF, and now recently this ESG, the social environment, social, and governance, which is something uh, the TLDR of this, according to James Lindsay, okay, so according to James Lindsay here, which is is a mathematician, a conspiracy theory, cultural critics, an American author, right? A North American author. So, according to him, this ESG is a way to certain companies, or it's a way for a narrative. In this case, like the LGBT or whatever narrative at the moment, whatever hot narrative is a way to uh, impose that agenda to companies. And if those company doesn't follow that well, you're going to get you're going to receive some penalties. Okay, so you're not going to receive some funds, or you'll not be able to access to credit and things like that. But in any case, so the whole point of this video here is to look at this beginner guide to financial statement, uh, mention a quick recap of this, where after all, the balance of this financial statement show you the money, and you have four of them. Balance sheet, that is a snapshot of the company asset, liabilities, and shareholders' equity. Okay, the income statement, which tells if a company made profit or not, how a company is making money, and how much a company spend and make over a period of time. The cash flow, which shows the exchange of money between the company and the outside world, as well as the statement of the shareholders, something that they don't talk about this, but it shows the change in interest uh, of shareholders over a period of time. So great, because with that, uh, after I look at the cash flow statement, okay, just to make a quick recap of this, which show the net increase or decrease in cash. Well, it reviews the information from the balance sheet and the income statement, and this cash flow statement review the cash flow from one of these activities. So operating activities, investing activity, and financing activity. So the most common operating activities can be broken down into operating assets and liabilities, where in operating assets we have things like property, plant, and equipment, inventory, accounts receivable, prepay expense, such as health insurance, premium insurance, rent, marketing, uh, software license, contract, software license, maintenance contract. Another operating or common operating asset is the intangible assets such as patent, trademark, copyright, trade secrets, as well as the uh, goodwill That's another one. And keep looking at most common operating uh, assets like investment in affiliates, where you have things like joint ventures, equity investments, limited partnerships, associates, cash and cash equivalents are another common operating assets. So for example, these money market funds, right? Where they involve is in uh, the purchase or it buys and sell large volume of very short-term debt financial instruments, such as bank acceptance, which is very short-term debt from banks issued by banks, or certificate of deposit, which is a short-term save. Yeah, it's a saving certificate with short-term maturity, as well as the um, commercial papers, risky corporate debt, short-term corporate debt, repo, which is short-term government security in uh, U.S. Treasury bill or Treasury bill in general, which is short-term debt issued by bank. And it is funny because this indicates, right? So this indicates how important is the credit in the financial systems. Is the blood of how we promise something to deliver. You know, that's the whole idea. Well, part of the whole idea of the credit and money. So you're going to promise that you're going to deliver something. So, for example, when you go to a bar and you ask the bartender for a whiskey, right, or a beer, and then you don't have any money, so you promise that you will going to pay that after you go back to your home or your car, and you repay your debt. So what happened is that in that moment it create credit, and there is a very fantastic uh, YouTube video from Ray Dalio about the how the economy how the economy machine works, right? It's like how the economy machines work. 9 years
How the
ago,
economic
and it is very illustrated and also very powerful as well. It has nice visualization as well. Okay, so back to now looking at the most common operating liabilities, which is again part of the section or the first part of the cash flow statement, where in there you have is on the liabilities accounts accounts payable, pre accrue expense. So, for example, rent, utility bills, administrating salaries, taxes, deferred revenue, such as subscription service, which are obligations that a company have to provide for goods and service in the future. Subscription service, gift cards, income taxes, whether it's corporate taxes or sales taxes or withholding taxes, where also I look at short-term borrowings. How important is this, for example, for a company to meet their financial needs in less than a year? So bank loans or line of credits. What's the other? Uh, Issuing bonds. So companies or government can issue bonds to do that. Trade loans, for your suppliers and vendors, you want to renegotiate that. Or now for your employees, like payroll advance, okay, that will be deducted in the next payday. Also look at the um, notes payable, which is an agreement between the borrower and the lender, where they outline is all the terms and conditions of that loan. So, for example, banks, they issue a notes payable anytime you ask for a loan. So it described as the principal, which is the original amount borrowed, as well as the interest and the repayment schedule. You have this, um, uh, as well as the so you have bank loans, uh, business uh, pay in this case bank payables. So there's no payable created by banks or for business. So for example, financial institutions or venture capitalists, private equity that generate these notes payable, as well as for individuals that you can generate this agreement based on the value of your invoice, which is another way of how you can create this notes payable. So with that, then I also look at the warranties, which are obligations that a company has to provide or fix a defective product that or a product that doesn't meet certain quality standards. So you have manufacturing warranties, software warranty, parts, vehicle uh, maintenance. So once I look at this, right, and the way how this first section of the cash flow uh, here, the operating activities, how the first part of the cash flow, right, what it does is to conciliate with the total amount of income, the net income from the income, it conciliate the total amount of, or conciliate the net income from the income statement, okay, and uh, okay, and so what it does is to conciliate the net income from the income statement with the total amount of revenue or the cash that was used or perceived from one of these activities that I mentioned before. So operating assets, operating liabilities. Okay, and also it conciliate the total amount of cash that was used or perceived from non-cash items, items that affect the state of the company, such as stock-based compensation, or depreciation and amortization. So the whole point of this is to understand the first part of the operating activities, which is great. The second, if you take a look at the apple here, you take a look at the apple here, okay? So the second here, the second part of the cash flow statement, okay, is the finance investing activities. And this is generally involved is the long-term assets such as property, plant, and equipment, intangible assets, whether it's patent, trademark, copyright, goodwill, trade secrets, customer relationship, as well as investment, uh, leasehold improvement. Okay, so with this, uh, then the third part of the cash flow, which is the financing activity, and this section focuses on how a company raised funds from investors and repaid them through capital markets. So this section also helps investors to see how often a company is raising funds and where this income, sorry, and where the sort of this money came from. Because it's a company, uh, the cash flow comes primarily from its operating activity. That might be a good sign of investment, especially for small or mid business, right? So for small to mid business, that's right. So that's a good sign for a good investment. However, uh, I say small to mid business, or also can be large business, but the management here is something crucial. I will say something crucial because if a company now is constantly relying on taking out of debt or issuing equity, so that might not be a good sign of the company. However, the devil is in detail because it can be a big company that can be found directly uh, from the Federal Reserve, right? That actually is printing money to directly to that, so they receive its loan at 0%. So okay, that's perhaps is an effect called the Cantillon effect. Cantillon uh, is Cantillon effect, which is something interesting. Uh, that Cantillon was a an Irish French economist born in the 1680s, and he described is what will happen, uh, for example, if you have a central bank that is generally printing money and provide that funds to the governments or these businessmen, business owners, that kind of thing. So it will create this sort of class here. So that's a very good, interesting reading, by the way. I'm not going to dive deep into there, but yeah, Richard Cantillon is something that you'll 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 start to hear about him quite a lot of, especially on the economy community or financing community. So anyway, so this is the financial capital, and the most example of the common example of these financial activities which involve is uh, raising funds from investors or creditors, repaying debt, and then redistribute earnings. So issuing equity is a way to do that. So for example, when a company goes public on their IPO, initial public offering, so the offering is ownership or equity to them. The other is issuing debt, right? So issuing some financial debt instruments like debentures, notes payables, bonds, repaying debt, repurchasing stocks, which is a way of self-financing a company, uh, leasing, where a company can create or a company may lay a company generate an agreement with another company for using a property, plant and equipment, vehicle, without taking ownership of that, right? So leasing is something very, very important in the way how you can grow your income, and has been historically like that. So once I know this, okay, the operating cash flow, investing, financing, then I look at something that, of course, you're not gonna find here. You're not gonna find this here because this is Yahoo Finance, unless you look at the Apple financial statement. Okay, unless you look at the Apple financial statement, you see that's right. I think I can see this. Um, right. The footnotes, no balance sheet, cash flow, the overview here, statistics, um, forecasts, no dividends, the profile, the charge. Okay, no, doesn't tell me anything here. Okay, no, thanks. I just want to take a look at the Apple report 4 quarters. All right. The consolidated financial statement. So when you look at the financial here, that's right. Um, they're supposed to have a section called the footnote, but they don't. Interesting. They don't have that, or they don't show that. Interesting. The footnotes. Perhaps it's not here in the Apple Result Finance. So if I want to go to the newsroom, okay. Mm-hmm. Apple report 4 quarter results. Um, Apple reports first quarter results. Apple investor earning call. Apple financial results. Hmm. Interesting. How can I see, for example, the financial statement? Apple, Apple financial statement. It's going to this, right? So Apple reports second quarters. So investor relationships. Mm, hmm. It's like they don't. The footnote is something important. Where's the footnote of this? So the footnote is something important. Why? Because as the sec described here, the footnote are packed with additional information to provide more context about this financial uh, result or this financial statement. So, for example, significant amount, so significant accounting policy and practice of how these companies adhering to accounting practice, and that and they must disclose that information. So they're using is the gap, okay? Using is gap, which is generally accounting accepted principle, not that demon. Is this might be have a correlation? In any case, is the gap here the generally accepted accounting principle, or it can be the international financial reporting system, okay? uh, which is a way to conciliate that information to make more transparent and easily shareable around the world. Okay, is this. So that's the reason that's one of the reasons why the footnote is important. The second is the income taxes, is how this company actually is paying these taxes in a more detailed way, locally, state, federal, and foreign taxes, as well as the pensions and or any other post-employment retirement program, where here described is in detail uh, what is the cost of this program, as well as if these programs are over or underfunded. And now the stock options. which is a kind of compensation or is a compensation from the employee to employees that allow them to take ownership of the work, or at least when they're working on that company. So okay, uh, and this is stock options. Okay, as after all, this is a financial instrument, and when we talk about financial instrument here, according to Investopedia, is an asset that can be traded or a package of capital. Okay, so this financial instrument, which is the stock options, these financial instruments allow the user or the owner of that the right, but not the obligation to buy at a specific agreed upon price and date. You have two types of options. You have puts and calls, where puts are bet that the stock will fall, put, and calls are bets that the stock will rise. Okay, okay, cool. So, so if I want to take a look at the MD, okay, so for example, MD, which is the management discussion and analysis of financial conditions and reporting result from Apple, okay, the SEC feelings, all right, and mm, I just want to take a look at the all feelings, so like a year, all feelings, and if I want to just take a look at the quarterly and current reports, uh, annual feelings, registration statement, annual report, okay, in 2022, okay. This, in theory, supposed to show you is all right. So it will show you is the management discussion and analysis of financial condition and results operations in business risk and results task comment. So it show is things like the business, market registration, common equity related stockholders, directory, director, executive officer, and corporate governance, an exhibit, and financial statement schedule. Mhm. So here, they don't show. So here they don't show is, or I don't see they show is, mhm, for the fiscal year of end, but they don't show quarterly all feelings, right? They don't show is quarterly report. If you look at the quarterly report here, which they show here is Form 10Q, where here you're able to see is the financial statement and okay. So the Form 10Q allow you to see that, and the Form 10K to watch is the management discussion and analysis of financial condition. Okay, all right. So here's where you can see is the financial statement, right? And read the footnotes. Summary of significant accounting policies. Okay. It also mentioned the revenue, financial instruments, cash and cash equivalent, marketable securities, okay, derivative instrument and hedging, hedging, uh, account receivables and here, condensed, condensed consolidated financial statement details, okay, income taxes, death, okay. So on the income taxes, the European Commission announced its decision that Ireland granted state aid to the company by providing tax opinion in 1991 and 2007 concerning the tax allocation of profit of the Irish branch of two subsidiaries of the company. The state aid decision the state aid decision ordered Ireland to calculate and recover additional taxes from the company for the period of June 23, 2003 through December 2014. Legisl- Irish, legis, legis, legisl- Irish legislative change effective as January 2015, eliminating the application of tax opinion from that day forward. The company and Ireland appealed the state aid decision to the General Court of the Court of Justice of the European Union. The General Court. On July 15, 2020, the General Court annulled the state aid decision. On September 2023, what? On September 2020, on September 25, 2020, the European Commission appealed the General Court's decision to the European Court of Justice, a hearing that has been scheduled for May 23, 2023. The company believes it will be eligible to claim U.S. foreign taxes credit for a portion of any increment in Irish corporate income taxes potentially due to related to the state aid decision. So they are so Apple is their fiscal address, okay, is on Ireland. Okay. So term death, share shareholders equity, which is another part of the notes. Benefit plans, exactly. Restricted stock units. A summary of the company RSU restricted stock units activity and related information for the 6 months ended in April. Number of restricted stock units. Share-based compensation. Contingency and commitment and contingencies. The company has entered into certain of balance sheets commitment that require the future purchase of goods and service, unconditional purchase obligation. The company and condition purchase. So is this? This is in millions. This is for contingencies. Contingencies. The company is subject to various legal proceedings and claims that have arisen in the ordinary course of business and they have not been fully resolved. The outcome of litigation is inherently uncertain. Note 10. Segment information and geographic data. Item 2. Management discussion and analysis of financial condition and results. That's one of the reasons that, okay, so interesting that the form thank you provide this. Okay, the form thank you provide all of this information. Interesting. Very, very, very interesting. So the form thank you provide information about the financial statement as well as the footnote. Okay, why it's important to read the footnote? Because so it describing its significant accounting practices and policies as well as income taxes, post-retirement programs like this. So Yeah, post-retirement programs. So something like this, a benefit plans. So post-retirement programs. Okay, so post-retirement programs. Yeah, so post-retirement programs. Okay, such as benefit plans or pension and any other pension, any other program and pensions and any other post-employment programs and how they are described in detail the cost of this program as well as if those funds are under or overfunded. Income tax benefit related to share-based compensation expense. The company has entered into certain of balance sheets commitments that require the future purchase of goods or service. Future payments under non-cancelable unconditional purchase obligation with a remaining terms in excess of 1 year as of April 1, 2023 are as follows in millions. This is their expectations. Mhm. No tens. Segment information, geographic data. And then I look at the another topic in the financial statement, which is the management discussion and analysis of financial condition and results operations. Where here, this section is describing from the management from the management eye about the risk that has shaped the company or possibly likely will shape or possibly likely shapes the company's future. And they describe something interesting and important here, which is risk. Okay, which is risk, fucking risk. So you can find a narrow explanation of the company financial performance in a section of the quarterly or annual report. Exactly. In the annually allegedly in the annually of the quarterly or annual report. Here is quarterly or annual report. Okay, you can find this information in there. Okay, where it is a management opportunity to tell investors what the financial statement show and do not show, as well as important trends and risk. This is very good. This section is actually describing it packed with a lot of meaning because it is a management opportunity to tell investors what the financial statement show and do not show, as well as important trends and risk. Important trends and risk that have shaped the past or reasonably likely to shape the company's future. This section, my friend, is very important to understand deeply. Why? Because even though that you are working as a remote freelancer, that kind of things, what happens is those clients that hire you are taking massive amount of risk, allegedly. Okay, if they're not taking or if they're not receiving funds from this from the feds, they are taking massive risk for you. This is maybe I'm going to play devil advocate here, okay, for all of these LLC, S corp, or Z corp out there that are not that are not in the big leagues, that are not in the NBA financial leagues, right? What happening is, yes, these companies are taking vast amount, or most of the time, these companies are taking vast amount of risk, and as long as you can provide their value, I'm not saying anything new, and you can solve their problems. That's the whole idea, and that's how you can deal with this uncertainty. Okay, so Camus mentioned something about the this life that doesn't have any meaning. Okay, and there are, and this is just recognize the vast uh, uncertainty out there that most of us have to deal with it, and because of that, so companies, all right, well, they have decided to take an action on that, and try to get into a particular industry, or uh, most of the time industry, okay, and take a cut from that while solving the problems, or solving his own problems as well as the other problems. And in the meantime, well, try to not only it's try to deal with the uncertainty that is running a business, or that is living a life, essentially. Okay. 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 This is just me being, well, playing devil advocate here. Okay. Holy fudge. Holy fudge. Holy fudge. So yeah. So companies are facing, depending on the company, but small and big business are facing tremendous risk. Uh, yeah, and I don't know if those business owners are, perhaps they might be aware of that, right? But I don't know if they want to thrive, not only the business but only in their life. So some of them might be, others don't. So that's where the competition born. Mhm. Okay, okay, interesting. Okay, very very interesting. Very 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 interesting. Thank you, which is the feeling. Thank you. Okay, all right. This section and other part of this quarterly report on 14Q contains forward-looking statement within the meaning of the Private Security Litigations Reform Act in 1995 that involve risk and uncertainties. Forward-looking, exactly, that involve risk and uncertainties. Forward-looking statement provide current expectations of the future events based on the certain assumptions, and don't include any statement that does not directly relate to any historical or current fact. For example, statement in the Form 10Q regarding the potential future impact of macroeconomic conditions of the company business and results of operations are forward-looking statements. Okay. So statement can also be identified by words such as future, anticipate, believe, estimate, expect, intends, plan, predict, will, call, and can, may, and similar terms. Because after all, this MD, this MD&A is an opportunity for the management to tell the financial condition to investors. Okay, it's a managing opportunity to tell investors what the financial statement shows and do not show, as well as important trends and risks that have shaped the company past. Yeah, and risks that have shaped the past Exactly. And risks that have shaped the past or are reasonably likely to shape the company's future. I think this is the core of this. So the second rule governing MD&A requires disclosure about trends. Yet the set rules governing MDA require disclosures about trends, events, or uncertainties known to manage that will have the material impact on reported financial information. The purpose of the MD is to provide investors with information that the company management believe to be necessary to an understanding of its financial conditions, change in financial conditions, and result of operations. It is intended to help investors to see the company through the eye of management. And it is also intended to provide context for the financial statement and information about the company earnings and cash flow. Oh, yeah. Okay. So with that, that'll be all for this video. Take care. Bye bye.